Welcome back, everybody, and no, that title is not just a clickbait title. There has been a proposed tax law that could change the entire real estate industry in terms of investing because of essentially what they're bringing is called the 1031 exchange. And so what's up, guys? My name is Cody. I'm an investor-friendly realtor here in Winnipeg. And in case you haven't heard, regardless of which political affiliation you're associated with, the conservative leader brought up the opportunity to defer capital gains when you reinvest in a like-minded asset class in Canada. And so to understand what effect that would have on the real estate investing industry, I think it's really proper if we go through what is this 1031 exchange? How does it work? And how would this change the Canadian real estate investing game? So what is the 1031 exchange? Essentially, in the US, they have this IRS code. I think it's 1031B or whatever it's called. I don't fully understand it because I don't need to, because it's never been applicable. But the basis of it is that when you sell a property, you have a window of time where you can invest the proceeds of that property, which would normally be subject to capital gains, into a similar like-minded asset class. When you invest those proceeds into that asset class, it allows you to defer the capital gains portion until you sell that asset. Now, obviously, you can stack this. So as you buy more and more properties, you can continue to defer and defer and defer. And so this is something that the US has had for a long time. And this is a reason why a lot of people choose to bring their money outside of Canada and put it into the US market because of this deferral of capital gains. Now, before we get any further, I think it's important to explain how capital gains is actually taxed right now in Canada. And the way it's worked is your sale price minus your purchase price, of that portion, 50% of that right now is taxed as capital gains. Previously, our government had talked about making, if it was over $250,000, 66% of that would be taxed as capital gains. What does capital gains tax means? Well, that means that portion is taxed as regular income on top of your personal income or your business income, whoever holds that property. Now, enter in the 1031 exchange, which is on the other end in terms of investing, where now the Conservative Party has suggested that if you were able to buy a property and then you sold that property and took the proceeds of that sale and put it into another property here in Canada, you would be able to defer the capital gains portion on that second property. This would allow you to essentially invest untaxed dollars again, which is huge when you compound that over time, because if you look at a chart for investing, if every time you're investing you get dinged a little bit on the taxes, it's much harder to scale. If instead you could take those post-tax dollars, it's much more of an exponential growth, or what people call the snowball method. And so this would actually encourage further reinvestment into Canadian assets and the Canadian economy, keeping a lot more of our dollars here in Canada, which is huge for real estate, because that means more plumbers, trades, electricians, realtors, appraisers, you name it, are all getting more opportunities as there's more turnover in the market. Investors are more likely to sell properties that they maybe don't want anymore because they know they can put that into a better property. So not only does it increase demand because more investors are keeping their money more here in Canada, but it also will increase supply a little bit because investors who are holding onto properties that they no longer want or could perform better in other properties are now incentivized to sell those properties because they're not going to pay capital gains on it. Now, I know I just said they're not going to pay capital gains on it, but I think it's important to clarify that they will pay capital gains on that sale, just not until down the road. They're deferring the capital gains. They're not avoiding the tax. The tax is still there. And I think this is a great idea for Canada to really bolster our economy and allow a lot of those investors to stay countryside. Because you see, what happens right now is a lot of these investors, they will build up a humble portfolio in Canada, and then it becomes too hard, or there's too many hurdles to buy more and more in Canada, and they move all their money into the States. They start buying properties in the States. Because prices are typically lower, the price to rent ratios might make sense, and because of the 1031 exchange. Now, if you remove that 1031 exchange and they build more homes here, suddenly Canadian real estate has fundamentally changed. And this could easily be the start of what would be the biggest change in my lifetime for Canadian tax code on rental properties. Okay, and the icing on the cake of this entire 1031 tax similarity is that this really helps investors to scale. And so right now, if you took a single family house that was an investment and sold that, you can take those proceeds and put it into a multifamily home. You don't have to stay in that single family space, which I think is where a lot of people get concerned, because I think that investors are just going to buy up all the regular single family homes, but instead there's actually more opportunity to scale up and buy these bigger multifamily properties that normally you might not have enough funds for, because the CRA takes a huge cut of that through capital gains. Now, because you can defer that, you have more money to play with. You're able to leverage more, which means you could buy higher priced assets, which again is only going to further boost the real estate investment here in Canada. Now, I do think there is a couple of downsides to this. The biggest one is just that for those who aren't informed, if you defer too much taxes, you could get in a lot of trouble by having a large tax bill later on in life. Ideally, with real estate, I think it's pretty easy to avoid that, because as real estate values go up, your deferred tax burden will be higher, your property value will go up, so ideally by the end, you're able to cover that additional tax. Now, while we're on this topic of tax cuts for real estate investors, sort of in terms of the government and taxes and new housing, one thing I would like to see happen in the Canadian market is there needs to be some sort of incentive for builders to build we like to call it affordable housing, but I think that's actually misplaced. I think we should call it, starter homes. We need to incentivize the government to build more 3-bedroom, 2-bath, 1,000 square foot bungalows in cities. And right now, they don't do that because there's no money in that. They can make way more money if they build these larger homes and sell them for more, because there is demand and there's not enough supply. But once you introduce this 1031, it might start incentivizing some investors to keep their money, putting it into new construction, which means the turnover on these newly constructed units could be quicker. This would allow these developers and these construction companies to be incentivized to build more units, and maybe even incentivized to build smaller units. Now, that incentive would have to come from the government, where they would have to find a way to incentivize the builder to build a smaller house that they're going to take less profit on. How to do that exactly, I don't have an exact idea. I'm not a politician, but I do want to bring up this conversation because it does seem like, at least from this point of view, that the conversation is starting on how to make real estate investing more favorable for Canadians. Other big benefit, or maybe the waterfall effect of this, is that this would really hurt foreign investors, because this 1031 exchange would only apply to Canadians. So those who are investing with foreign investment money from other countries wouldn't get this deferred capital gains benefit, right? This would only be allowed for Canadians or permanent residences, which means local Canadians can buy more local Canadian properties and help the Canadians grow in their portfolio, while not encouraging those who are foreign investors, but giving them a benefit, which I think is great, because I think more Canadians need to buy more investment properties in Canada, not just in the US or other countries. And I think we need less investors from other countries buying in Canada. So what do you think? Do you think Canada should go through with this suggested 1031 exchange, or should they leave real estate the way it is and just assume it's broken, it's going to be way more work to fix, you don't really care about investors? I think it's a great opportunity. This would be fundamentally one of the biggest changes for real estate investing here in Canada that I think would encourage a lot more money to stay here. I don't think people quite realize how much money travels outside of the country. And so let me know what you think. Drop a comment below. Let's get a discussion going. I think this is going to be a huge opportunity, and I'm excited that this is even being talked about.